Hey, we're live. June 6th, 2024.
Let me do this bit. You're
Okay.
in no condition to speak.
Okay.
So welcome to the Deribit live show, June 6th, 2024. Poor Shane's losing his voice. So I will be trying to do most of the talking today, which means the show is going to be nowhere near as professional as it normally is.
I was looking for sympathy, Richard. I want cash, flowers, whatever you want to send.
Send him good advice.
No,
and so we're just waiting for people to come in.
Yeah. Hey, June 6th, big day. Big day.
What happened on this day in history, Shane?
Oh my gosh. I think everybody just immediately comes to their mind, D-Day.
Oh, yeah, of course.
Yeah. So it's burned into my brain. And in fact, we have our own D-Day. I guess Deribit Live Day. not to make light of the sacrifice of a lot of fine young men that day.
Well, one of many sacrifices of fine people through both completely unnecessary wars.
Absolutely.
Who
do we have with us today? Andrea, great.
Well, mind you, without which I may not have been born, because I am just outside the tail end of the baby boomers.
Oh. Yeah. Well, you could say the same thing about 1066, really. I mean,
that's true. Yeah. I mean, yeah. When you think about it, people just seem to love killing each other.
Yeah. Here, let me bring up the slides. Let's keep the topic light, hey? All right. So again, I'm going to do very little talking.
Yeah. So trading crypto options with the pros.
Yeah. Here's our topic for today.
Oh, yay.
Actually, it's higher than that now.
Yeah. What's the number now?
I think it's at 32%, but we can show that in a little bit, or 35% or something.
Yeah, I did a LinkedIn post about it. I thought it was worth celebrating. Road traders. Here we go.
Well, actually, here I think I've got it on the slide here, Richard. Here's the data right here.
Plus 31.94%.
Oh, okay. Yeah.
Or 32%. Yeah. Okay. So we've had a really good run with our Bitcoin miner strategy. So in just over 3 months, we have more than doubled our target. Is that right? Yeah, because our target for 3 months would be 12.5%. So we're more than double. So we are cautiously optimistic that it's a good strategy for the current conditions. We're by no means counting our chickens or resting on our laurels and every other kind of what are they called? Metaphors.
Yeah.
I was going to say euphemisms, but they're not. And so starting cash 0.0825 bitcoins, current cash 0.1105 bitcoins. Cash that we could actually liquidate today is 0.1089 bitcoins. So we've actually mined 0.0264 bitcoin using the initial $5,000 collateral. And starting cash, 5,502. Currently 7,840, which gives us a synthetic mining annualized return of 336%.
Nice.
Yeah.
Nice.
I'll be a monkey's uncle if it's that number at the end of the. I mean, I'll be happy, but So here's the graph. The graph's a bit scruffy because I didn't record PVs every day in the early stages because I didn't think it would go so well. And but what we'll do is we'll go back through the records, we'll download from Deribit, and we'll form a proper daily chart so we can publish that somewhere. We can maybe even publish it on our website or something.
I think too, you decided, or you thought you might want to publish Sharpe ratios for a handful of our different strategies we run.
Yeah. So once we've got the daily returns we're done, we can then compute daily Sharpe ratio and weekly and monthly and so on. Yeah, it's going really well. It's and actually there's a comment here by Vladimir that during a bear market we should just sell calls instead. And maybe, but you do get a lot of premium in the puts in massive amount of premium in the puts in the bear market. So there's something we should think about. We should probably look at some backtest data and figure out what we're going to do if the market suddenly turns.
Yeah,
and which is something I want to mention today, actually, about the risk of that. And then this is in terms of dollars, right? This is the chart. Can you just make our images a bit smaller so people can see the HODL line? So the previous graph was in terms of Bitcoin, which is why you saw the do nothing line as a flat line. And had we just bought Bitcoin and done nothing, then we'd currently be up, 12% or thereabouts in dollars. But actually we're up sort of 50-ish percent, 48.52% in dollars. So again, we're definitely outperforming being a hodler.
Yeah, with this strategy, we wanted to keep it as simple as possible, and not just sell puts, but the right time to be selling calls. And we got burned once.
Yeah, that big drawdown back at day 60, I think, was us selling calls to. We were trying to protect our P&L a bit too aggressively and ended up damaging it.
Yeah.
And actually, this morning I rolled some 72,000 Friday calls, 2-day calls, to 75,000
on the 14th.
On the 14th, and I just did that because I paid 40 to get those calls back. We sold them at 70, so we made a profit, not as much as we wanted, and I wasted probably wasted a lot of theta by doing that. But at the same time, the last thing I want is to have a headache tomorrow when if the markets go crazy and we're blasting through 72. So I just didn't want to risk it. So I thought I'd just defer the problem.
Yeah, for sure. Let me just share my screen. And I'll go to, we'll take a look here at Bitcoin. You know what? It's really held up. And I think you said there was just a piece of news that came out about Robinhood, yeah?
Robinhood have just said that they are trying to buy one of the exchanges. What was that?
Yeah, they all have the same name. There's like thousands of exchanges.
Something.
They'll have a bit or a coin in them or an X in them, yeah.
To acquire global cryptocurrency exchange Bitstamp. Bitstamp, that's quite a big
Bitstamp, one. That is a bigger one, yeah. Yeah, okay. That's interesting.
Yeah. Plan to close early 2025, subject to regulators. I don't know whether that has any effect today on Bitcoin price. I think today is more about hedging liquidations at 72 plus K and ETF buys. What was the BTF buying for yesterday?
ETFs were 6.92 K.
Wow. Okay.
In fact, I'm going to share my screen there right now. It wasn't as big as the day. It was half the size of the day before, right?
No, but still, it's not small, right?
Yeah.
And that was across the board. Wow, it's all of them.
Yeah.
Okay.
Yeah, across the entire.
So it looks like this is starting to become viral. So. I think
one other thing I will just quickly show here is this liquidation heat map. Now, one of our members, Nick, shared this with us on CoinGlass, and he looked at it quite a bit. But it was interesting to note that over the weekend and up until kind of Monday, Tuesday, the biggest liquidation risk was kind of a 71.5, which makes sense. But you can see it's now up at 72.5. So I suspect that during that sustained strength, a lot of people were probably adjusting positions to give themselves a little bit more breathing room, us included. Some accounts I did roll some of the 72,000 short calls to the 8th, some to the 14th in strangles and other things. But I thought that was kind of interesting. And I'm going to keep my eye on this heat map a little bit more to see how those high events are rolled around and moved around. But when we look at the chart, it makes perfect sense, because if I go back to my
what's also interesting to me is that people don't seem to be building up liquidation risk on the downside. It's like people aren't getting levered long at the minute, which is interesting, right? They're kind of healthy.
Yeah, I think because typically when you think of a liquidation event on Deribit or on crypto, you think of to the downside. And maybe if I look down at 65 or something, or 60, that'd be a huge number. But look, this is our all-time high up here. I mean, we're so close to it. A couple $1,000 away. We're just hovering underneath it. So there's a lot of danger. But the right trade, according to the chart, is to be selling those calls up here. Do it as a spread if you want to stay safe, because we've bounced off it. Eventually, it's going to break one or the other. But if there's money there, we've got a little bit elevated vols now. I think vols are 54.5, or
they're just coming off today.
54 and a quarter right now. The devol.
Devol, yeah. Adam, the 1 month vol is a bit stickier. Devol's roughly 1 month.
Yeah.
I tend to follow the 1 and 2 week vols.
Well, you're using the immersive finance interface, which breaks that down a little bit better.
Yeah. So I can share that.
Yeah, sure.
Entire screen 2. Just checking there's nothing I shouldn't be showing. So because I'm tracking here the 1 week and 2 weeks. See how they sort of that's the yellow and the red line. They sort of built up as the market built up, which kind of implies people having to hedge their short-term positions and maybe roll them and all that kind of stuff, or people doing what I did, which was just saying, I'm a bit close to the money, I'll just roll out to whatever. And then the 1 month also came up. It's just selling off a little bit more gently. But what's interesting is the 3 month vol is pretty flat. So people are sort of just looking forward to July, August, September actually. That's when people are going to come back to their desks, and I think the assumption is that that's when people are going to buy, which means, of course, it's not going to happen then at all. It's going to happen some other time, or they might sell. But vols are showing a bit less fear today. Let's see what happens around the US Open, because it all happens around 5 p.m. my time, the US Open, right? So.
It does. Occasionally we'll see some action on other days, but for the most part, that's very true. And in fact, I'm just looking at the volatility surface right now. If you wanted to share that, I think I've just noticed that and it must be building in a discount for the summer months, because I can see that, July, August, it seems like the vols come down. It's still, the back months back, next March are still kind of where they were. Maybe up a little bit, but it's pretty flat.
I got 3 month vol at 58.7 at the money, and 1 month at 53.5. Yeah, let me quickly call up the Deribit Live vol surface. It's under trading
tools on the left there. Yeah.
I never look at this these days. So we've got a bit of a vol spike for tomorrow. Is it today?
Yeah, bit to the upside. Yeah.
Yeah, that's just weekend expiry. I guess makes sense, right? We've got the expiry coming, and there's been a move, and so there'll be some gamma stored up. Yeah. And then falls off horribly into the weekend, and then dip here at where's that, June? I don't think we can read much into that. It's just that no one's been buying it because they're all along the 14th.
It just seems like the front half on the call side has kind of come down in the last week.
Oh, I see. I see what you're saying.
It's a bit more of a
kind of a Well, there's always this lingering suspicion in my mind that while everyone's watching the ETF numbers and avidly buying and assuming that there's going to be no downside because BlackRock will come to the rescue, there's always the concern that these ETF purchases may not be permanent. The people who speculate with these things, and Wall Street is using these ETFs as proxies for buying and selling Bitcoin, which they will dump in a heartbeat if they think it's going down. And the bigger the ETFs get, I think almost the more risk they bring to Bitcoin markets, because it's like a very, very visible whale who's extremely jittery and panicky. Yeah. So I think I've explained this before, that while I think people like Michael Saylor buying Bitcoin is a stabilizing factor to the price, people like BlackRock buying it is probably just introducing future volatility. I mean, Saylor will of course introduce future volatility if and when he breaks his covenants and is forced to liquidate his entire company. That would be a major Bitcoin event. But and I definitely carry tail risk because of that, of the risk of that. Because it may happen tomorrow and it may happen in 4 years' time. But the way he's getting about, he's inviting,
Yeah, I think it's never a bad idea to buy those cheap long tail puts.
Especially when they're cheap, right?
Yeah, buy them when they're cheap.
Right now with massive you've got massive skew to the upside. You've got massive cost of carry. And if you look on the option prices, I don't know, go out to somewhere like September. Distance, yeah. So, why can't I scroll? It does this sometimes. If I just refresh, sorry.
You have to upgrade from your Commodore 64.
So let's look at so the plus 47% move is 64 vol, 303 mark price.
And that's September, yeah.
That's for September, say. But for the equivalent put at price, we're looking at a minus 24% move. So effectively the puts are priced at half of the calls at the moment because of the skew and the look where the future is. The future's at 74.946 when actually spots at 71.2. So there's a massive cost of carry, implied cost of carry, and massive skew involved. So because the whole market believes market's going up, so that makes puts really cheap. So
yeah. I'll just make a comment too, Richard. We're going to go through a little bit more of our strategy in the spreadsheet in a moment. But if you have any questions, please put them in the Q&A section. Yeah. And you also notice in the chat too, if you're not trading on Deribit yet, there's a link there to save 10% on fees. Now, Giandre has a comment here that she says you can have the term structure on Deribit. We go Deribit options and options data.
Order book term, is that the one? Order book term structure.
Yeah, and we look at this quite often, especially when we scroll down the open interest. We're always looking at that.
There's the skew, and then there's the term structure. So here's the this is the out the money vols. And versus forward IV. And is there one for interest rates? Maybe on some other page. I to be honest, I'm so used to looking at it through my tool that I don't know.
I think I just saw it there. Actually,
look at future. Actually, future. Here's a good place to see it. You can see the premium here and the implied rate. Yeah, here we go. So actually, 1 year cost of carry during the bull run up to 73 that we saw was, I think, peaked at about 18%.
So around there.
We're not far off that. So actually, there's a lot of people buying futures and holding them.
And that number sticks in my head because it was like a credit card number. You expect 18-19% on credit cards. Yeah. So it's stuck in my head. I mean, we're so close to highs. Like we're just any good news could propel this through new highs. There'll be a hell of a lot of hedging that'll have to be done. Yeah, which will push it even further. So I think if we get a bust through that 73 level, we can look at high 70s at least. Even if it's just a wick up and a retrace, I think that'd be reasonable.
Okay.
So do you want to go through the kind of the spreadsheet and our strategy and what we've been doing for this very simplified synth miner strategy for Deribit Live?
Shall I just do it from here from the from the book? Options. So at the moment, actually, you know what? We need to place a trade. So
we do.
So currently, we're fully out of risk on the 7th of June, and we've got our residual cover left in, which is pretty much worthless. So we're just going to leave it just in case, on the off chance we get a mega move before expiry. We've got no cover on the 8th. Interestingly. Oh, wait a minute. The 8th is not a weekend, is it? It's a weekend. The 7th is the expiry date. Yeah.
Yeah, that's Saturday the 8th. Yeah.
Okay. It's Thursday today, is it? Oh my God!
It is,
another week's gone. All right. So on the 14th, we're short the 67 and 66 puts. I need to add my little buyback order there. Always do that. I'll just in case we get a wick and a wick up and down. I'd be stupid not to get out. And I've rolled those 72k calls for tomorrow, which was probably me just putting out. But I thought, was it prudence is the better part of valor?
Yeah, fine. You moved them to 75k on the 14th. I see. Yeah.
Yeah.
And I put the cover in at 82.
Yeah, nice. Okay.
10% away. Yeah.
Yeah, perfect. And so we are making 100 about 10 basis points. A bit more. About 13 basis points a day from that position.
Yeah. And for anyone watching for the first time, our strategy here is to try and make 10 basis points a day.
So 10 basis points per day per position opened is really the strategy.
Yeah.
So when they're opened, for a week out, we're trying to get a net credit of 70 basis points after fees and costs and cover.
We're using 7% margin. I mean, we're using nothing.
Yeah, it's quite nice, right? So we've got 0.1 Bitcoin of collateral. We're exposing ourselves to 0.2 Bitcoins of risk. And I'm just going to go and add a bit more risk. So the 21st had a little dip in its vol, didn't it? So we're currently trading at 48 at the money on the 14th.
Mm-hmm.
And we're trading at 49 at the money on the 21st. Okay, so we can do one for the 21st.
Mm-hmm.
And to my horror, I found that I've got like 68k puts running on my book at home. But maybe that's the right trade. Who knows, right?
It could be.
So we've got 15 days to run. So really, if we sold 68k puts and bought cover at 62, we'd almost get that. So we're going to have to accept less than we really want, I think, if we trade today.
Well, we don't have to. I don't really want to go to the end of June, but
I was going to say, I'll just have a quick look at the end of June, right? Because
but if we can give ourselves more distance, I'd be happy.
I quite like 51 vol, right?
51, yep.
And also in 1 or 2 weeks, the skew is really solid. So here,
what about the 66,000s at 51 vol?
66. So how many days to run is it? 21 days. If I'm going to go this far out, I'd rather play the fall off in the vol curve. So I'd rather say, do you know what? I'd like to. I'm going to collect 10 basis points a day, but I'm actually going to close my position out in a week's time or 2 weeks' time. I'm not going to run it to expiry. So I'll choose a position that will have decayed to almost zero by say 2 weeks. So what's going to be close to zero in 2 weeks' time? 14th.
That's 14th is less than that. That's 1 week away.
Oh, but it's 2 weeks away from the 28th, right?
Oh yes, yeah.
So 66 is going to be 44 in 2 weeks' time.
Everything else remaining equal, of course.
Yeah.
Which it won't be, but you never know. You never know.
I'm almost inclined to sell 64s, but actually 60s, I can do 66. That's fine. We can always roll it to July if we really get in trouble, can't we?
I'd rather not sell the end of the month, but
all right, okay. I won't push it. All right.
I think you're okay either way, to be honest. But
should we then do 66k on the 21st?
Let's do that. Yeah.
All right.
I just sleep better. I mean, I know this is a small account we're managing for Deribit Live, but
we're filled at 105. We've got filled at mid. Okay.
Okay, great.
So then cover at 60. Yeah.
Yeah.
Oh, look. Yeah. The skews towards interesting.
Yeah. So for people watching this for the first time, the basic strategy here is we're trying to mine Bitcoin without mining it. So we're using options. So we're mostly selling put options in order to earn more Bitcoin.
Yeah.
If the price goes down or against us, we're adjusting that. Sometimes we don't adjust it. Sometimes we'll just let it ride, then adjust it on the day of expiry. But we also do sell calls from time to time.
Yeah, we just run one. So we sell 3 puts to 1 call.
3 to 1 right now. Yeah. This particular strategy. Yeah.
And we it just selling the call just doesn't really make us any more money because we often end up rolling it, particularly in a bull market. But what it does do is it just provides a little bit of cushion in case we get a drawdown or a sell-off in the market and maybe one of our puts is underwater. Just gives us a bit more confidence, cash to put towards rolling that position or even letting that position ride while in the money. because we're trying to sell puts that we wouldn't mind being in the money on, right? So where would we want to buy Bitcoin is our equation here. Would I want to buy Bitcoin at 67? Well, today, of course, I would, right? Of course, when it gets down to 67, no, I'll be terrified. But today, I'm feeling like, if it got down to 67, I'd be in the money, I'd be fine. So that's why we're happy to sell there. And so what happens when we get the next move to the all-time high? Do we then follow it up, or do we actually hold off? Will be an interesting question. Right? And we'll have to discuss that with our Hong Kong book of technical trading and divination.
There you go.
The other thing I want to say is that my new strategy of using the cycles of the moon to predict price movements is going well.
Excellent.
Shane loves this. So we discovered a research paper that found a correlation between moon cycles and average returns in markets. And the long and short of it is you should buy in the week before the new moon and sell the week before the full moon. So
no, I'm just keeping my tongue in my cheek for no apparent reason. I've been around for a while, and I remember in the 1980s and the 1990s when there used to be like the Dines newsletter, for example. There's always different financial newsletters that came out, and there's these people espousing advice. It was kind of before the internet, right? And you get these once a month or once a quarter or whatever, and you could follow their advice. I remember seeing moon cycle talk back then too. So it's nothing new, I'm sure. It's been around for a while. So is there anything you want to share any further on our spreadsheet or strategy especially for anyone who's just kind of new?
Well, I mean, I'm always happy to bask in the glow of our amazing returns. I mean, who doesn't like looking at graphs that just go up and convincing themselves that this will continue?
That's a very important point. It really is, because and you and I are the same. When we start to feel comfortable, hey, this is going good, that's time to beware. It's time to de-risk and wait for it.
I want to actually make this point, and it's because people are extremely emotional about this, about returns, and even professionals are. So in my sort of other day job, my actual day job, I create and run strategies for hedge funds and systematic strategies. And I've actually started showing the returns of the synthetic miner to some of the funds we speak to, and they're like, "Whoa, 100% annualized returns, 200% returns with a really good Sharpe ratio. Talk to us about it." And I'm reluctant to, I think I would almost risk losing credibility if I said, "Well, look, all we do is we sell 3 puts and a call."
Hang on. On these discussions, you're cutting me in, right?
That for sure, yeah. But I just I'm introducing it currently as a look. This is just the state of the market. This is what the market's giving us, just with dumb strategies, right?
It's important.
And the point is in a rising market, well, the saying is a rising tide lifts all boats, right? You can be as dumb as you like. If the market's in one direction, you're never going to get it wrong until it changes direction.
Mm-hmm.
And this strategy is going to be all fun and games until that happens, and then we're going to have to do some work.
And then we'll have to change our strategy. Yeah, 100%. I can see Bitcoin's up to 71.4 now, so it's slowly creeping up.
Yeah, I have a feeling it really wants to break 72 for expiry.
Yeah, it could. But that's it in terms of our strategy. I mean, we wanted to keep it really simple here for the show. There's all kinds of people. We've got some really sophisticated people in our audience. We've got people who are just beginning. So it's a basic strategy that anyone can follow. We do everything limited risk. We don't have to cover off our positions with protective calls and puts, but we do. It's also makes the margin engine happy. So we do that. What was I going to say? I think one of the comments. Yes, and Volodymyr did mention that. Yes, it was Bitstamp. Yes, and we cleared that up. And yeah, they have been around for a while, and they are quite big. Volodymyr says when a lot of people are holding so much futures, That's probably a great time to buy puts. Definitely. Yeah. Yeah. Just buy stuff when it's cheap, just pretend you're a bargain basement hunter. And a lot of times they'll expire worthlessly. Other times, it'll really come in handy. So we've been big proponents for that. Vladimir, don't you think we'll see another shake of the market before reaching another all-time high? Could be. Although
we might.
It's holding though. That's what.
I don't think that this rally is due to people taking leverage bets on derivatives. I think it's more to do with just the continuous buying and there being no obvious sellers other than miners and long-term holders, etc.
You mean buyers in terms of the ETFs?
Yeah, I think the ETFs are providing comfort to people at the moment, and I think that I'm starting to receive phone calls from friends and wives of friends asking me advice on how to get involved in this crypto stuff. It's not a flood yet, but people are noticing. So I think I wouldn't be surprised to see continued support and growing support from retail over the latter half of the year and into next year. I wouldn't be surprised. But are we going to get shakeouts and drawdowns? Well, of course we are. Wall Street isn't going to miss a trick. They're watching the charts like we are and all the liquidation maps, and they've got better tools than we've got, and they're going to wise up pretty quick. And I keep saying it. Bitcoin now that there's ETFs, Bitcoin represents the only legal way to manipulate stock markets. Right. So they're going to do it. They're going to do it. They're going to hose you. So do not lever up.
Yeah. As long as if you don't have too much leverage, you can survive anything. Really, that's what it comes down to. And you used to have maybe 4 or 5, 6 years ago, whatever, when you were traveling, you used to have an indicator where if people like taxi drivers were chatting as you're driving from the airport, asking what you do, and you say you're involved in crypto, they want to talk about it. They want information. And then that dried up for a couple of years. Everyone kind of forgot about it or got burned or whatever happened. But it's slowly starting again, I think, is what you're saying. Eh?
I think. Well, anecdotally, I'm saying that I've now had 2 people phone me and ask me. I've had one husband asking me how to convince his wife he should go in harder on Bitcoin, and one wife phoned me asking me how to deal with a scammer. So a sample of 2, right? But
so I think what we should do is let's put your number in the chat.
No,
and see how many people. Okay. You're very popular, Richard.
No, I do not want to be that guy that gets investigated for advising housewives to buy and sell crypto. Thanks.
Yeah. Let's stay out of jail. Hey, I think we're out of time here. Let's see. I just showed that you've joined the room, Richard. So I don't know, something goofy is going on.
Some screwy going on, isn't it, with this software today, right?
Yeah.
Okay.
I think that's it for today. I'm just checking if there's any other questions. There isn't. Again, my apologies for having my voice shot, but whatever. I'm sure it'll be better by next week. Hey, until next week, I think there's a good chance we're going to be in a completely different boat next week. To Vladimir's point, maybe we'll have a big pullback. We'll be down at 65 or 63 or something crazy. Who knows? Or are we going to punch above 72, 73? I think there's a good chance either way that we won't be where we're at next week. So let's see. So until next week, we'll see you then.
Okay.